Welcome to The Explainer. We're about to pull back the curtain on the world of day trading, and we're going to turn what looks like total chaos into a really clear step-by-step playbook. So, let's just get right into it. Is day trading just some high-stakes guessing game? I mean, a lot of people think it's pure gambling, right? But for the pros, it is anything but. They have a structured daily playbook they follow religiously. And today, we're going to break down exactly what that looks like. So here's what we're going to cover. First, we've got to decode the market's language, the symbols. Then, we'll build what's called the night session box. After that, we'll find the market's center of gravity. Then we'll talk about following the trend, and finally, we'll get into the real rules of the game, the stuff that separates the winners from everyone else.
All right, first up, decoding market symbols. You gotta learn the language of the trading floor. I mean, first things first, right? Before you can even think about playing the game, you have to speak the language. And for a trader, that all starts with knowing the symbols inside and out.
And here they are. You know, this table really boils down a massive global marketplace into just a few key tickers. So you've got things like 6E for the euro, CL for crude oil, ES for the S&P 500. Each one has its own little shorthand symbol. This is literally the language traders speak all day, every day.
Now, to trade any of these, you obviously need some capital. And $1,000, that's kind of a key number to keep in mind. It's roughly what you need to trade one standard contract, what they call a lot, in most of these markets. Now sure, some like gold and crude oil might need a little more, but it gives you a really good idea of the starting point. Okay, so we know the symbols. Let's move on to setting up the playing field for the day. This is what traders call the night session box, and this is crucial. Before the day even really starts, the pros are already mapping out what they call the range. Yeah, the night session. Here's a wild fact that most people just don't get. While the US is asleep, something like 98% of the rest of the world is awake, and they're actively trading our markets. All that buying and selling, from Europe to Asia, it creates this whole range of prices before the New York opening bell even rings.
And that overnight activity? Well, it creates the box. This is, and I mean this, the absolute foundation of the daily strategy. All that trading action essentially builds a container, a box, that gives you the boundaries for the day ahead. It's kind of predictable.
So how do you build this box? It's actually a pretty simple three-step process. First, you find the high from that night session. That's your roof. Then you find the low. That's your floor. And finally, you identify the exact middle, the midline. Think of it like the 50-yard line on a football field. Simple as that.
And just knowing that midline creates this incredibly powerful rule of thumb. Where the market opens at 9:30 a.m. Eastern relative to that line gives you your first big clue for the day. If it opens above the midline, there's a really high probability it's going to go up first and test that roof. And if it opens below, well, you guessed it. The odds are it's going to head down to test the floor.
All right, so we've got our playing field, we've got our box. Now let's find its center of gravity using what's called the pivot point. This is probably the single most important price that traders are going to watch all day long.
So what is the pivot point, or PP? It's just pure math. There are no opinions, no emotions, no guesswork here. It's an indicator calculated from the previous day's high, low, and closing prices. You really can think of it as the market's fulcrum, or its center of gravity for the day.
And the rule that comes from this could not be simpler. It gives you your daily bias. If the price opens above the pivot point, your base is up. You should be looking for chances to buy. If it opens below the pivot, your base is down. You should be looking for chances to sell. That's it. It sets your bias for the entire day. But wait, there's more. The pivot also generates these other levels, support and resistance levels. You've got R1, R2, R3, which are like ceilings above the pivot, and S1, S2, S3, which are like floors below it. And get this, the source material says that about 90% of the time, the market is going to trade just between that first level up, R1, and that first level down, S1. It's like a mathematical map. Okay, so now we have a map from our box, and we have a center of gravity from the pivot point. But listen, there is one rule that trumps everything else, and that is follow the trend. It's the ultimate guiding compass. You've probably heard this before. The trend is your friend until it bends. It's a classic saying for a reason. It is maybe the single most important piece of advice anyone can give you in trading. So here's the bottom line. The conclusion is always the trend. All that other analysis we talked about, the box, the pivot, that's all secondary. It helps you prepare. But if the live trend is going down, you go down. It's the ultimate tiebreaker.
The source material has this great analogy that I love. You drive according to the traffic conditions, not the horsepower of your car. I mean, think about it. It doesn't matter if you have a Ferrari if all the traffic is crawling at 30 miles per hour. You're going 30 miles per hour. You have to go with the flow of the market.
All right, this brings us to our final section, and honestly, this might be the most important one of all. It's about the rules of the game, going from strategy to psychology and discipline. Because you can have the best playbook in the world, but it is absolutely useless without the right mindset.
So, what is discipline in trading? It's not about being some rigid robot. It's really about your ability to control your own fear and greed. It's about following your rules and treating this whole thing like a business. It means you cut your losses fast and you don't let your emotions call the shots.
And this slide just perfectly lays out the psychology of winning versus losing. Look, winners, as soon as they know they're wrong, they act. Immediately. They cut their losses as fast as possible. Losers, on the other hand, they hold on. They rationalize, they hope the market will turn around for them, and they let a small mistake snowball into a huge one.
So really, it all comes down to a few key ground rules. Number 1, treat this like a business. That means more profit, less loss. Protect your trading capital above all else. That's job 1. Cut your losses fast. Never, ever average down on a losing trade. And know when to just stop for the day. Know when to walk away.
So at the end of the day, the playbook is pretty simple, isn't it? It's logical. But the discipline, that is not. The real challenge isn't learning the strategy. It's mastering your own psychology to execute it. So the question is, which one will you master? Thanks for watching.